Hello everyone, good morning, good evening, good afternoon, whenever you are. This is Muhammad Al-Yahya talking to you from Saudi Arabia, Riyadh, explaining the 21-21 strategy that I am using in my daily trading futures market using TOPSTEPX. And I would like from this video to explain the price action cycle and day types that I use and recognize. First of all, let me thank you all for the likes that you provide me in the Top Step TV, and thanks for all Top Step TV crew for the decent and invitation to give me the opportunity to be presented to you. Let's go now to this quick presentation that I made, these slides. First of all, go to the disclaimer. It's very important to know the risk of the market and understand that everything that we tell is for education purpose only. We are not signal service. We are not providing signal service. All decisions that you make in trading are totally under your responsibility, and this is the type of trader that you should be, a responsible trader. And every hypothetical performance shown to you doesn't mean that it will happen again. And let's go to trading using price action. First of all, what is price action, or why is price action? Price action, first of all, is a way to read the behavior of the market, the price itself, how the price is going higher, how the price is going lower, what drives the market higher, what drives the market lower. So we don't care about the fundamentals. Yes, fundamentals are important to avoid news. News could move the price up or down without any reason. Maybe the reason you may know about it later on. However, we study and analyze the price action itself, the price moving higher and lower. So we study that behavior, because guess what? Who is moving those market? People. Even if there is algorithms are behind them are engineers, programmers who programmed that algorithms and switch them on and off. So at the end of the day, the money in the market getting in and getting out are for people. Okay, so people, they have psychology, they have tendency to get back to old prices, to repeat something twice, to avoid some levels if it is rejected earlier, to have a breakout. A lot of things that we see in human behavior can be seen in the chart. So why price action? So we understand what is price action. Now why price action? Price action, we use it because what matters at the end of the day is the price going higher or lower. And people tend to do things twice. People tend to visit earlier or old historical levels. Price, market don't forget price that happened before. And how the hell we can understand, or we can be convinced that this thing works? I mean, how do I read the market? How do I understand the market? And the market is not a human to understand. And this is somebody could say. And I respond to that saying price action is a way to communicate with the market. You talk to the market. You allow the market talking to you, telling you what has been done and what is going on now and what could be the next move. So when you communicate with someone, he told you about he's telling you about his history, and he's talking right now, so you can predict what is the next move. But again, that is a human and this is not a human. You know that you can communicate with animals. You can communicate with people that you never met. How? You communicate with people through the TV. I never talk to you in person. Yet, we are communicating. You are reading what I'm saying. You might expect what I'm gonna say. And that happens because we are communicating. And how deep the communication is there, you're gonna understand me well. So this is why I urge people to focus on one market so you can understand it. You can understand that price action, because every market has its own behavior, its own attitude, its own price action movement. They are not the same, identical. They are different. So when you focus on a market, NQ, ES, YM, crude oil, GC, you would with time be able to understand, because you communicate better with people that you know more than people that are stranger to you. Correct? So when you communicate with someone, even he doesn't know you, if you read his book over and over again, if you watch him on TV a lot of time, you're gonna understand him. Animal, you can understand your dog, your cat, your bird, if you stay a long time with it. I mean, if you have a dog, you can figure out if he's hungry, if he was playing, if it's want to sleep, if it's tired, if it's sick. Why? How? It didn't tell you that. It didn't tell you that I am sick, I am hungry, I'm tired. But you understand from the behavior that the animal is communicating you through his action. Same thing for the market. You can communicate with the market. Market will give you signals. So we want to understand those signals through price action. Now let's talk about what is price action cycle. In 21 strategy, that's my own strategy that I invented through a lot of courses, combined them together using Elliott waves, using Wyckoff, using classic trading, using indicators, classic indicators, using harmonic trading. I made my cook called 21 strategy. So it has a price action. That price action says, let me get back to the chart so I explain it more frequent. It says market always, not always, the market tend to do channel, break, leg 1, leg 2, trading range, and reversal. This one is not doing that right now. Let me find another example. Let me find another example that we can find that, yeah, we can see this. Channel, break, leg 1, leg 2, trading range, reversal. Okay, so let me put the white. We have a channel, market is moving in channel, and this is the ideal price action. Then you have a break, breaking this channel, that channel puts in a high. Then you will have leg 1. After that, you're gonna have a correction to the moving average, 21 moving average, to one EMA. If it touched the 21 EMA, now we anticipate leg 2, which is equal to leg 1. Leg 1 doesn't have to stop at the high, and we don't know where it's gonna stop, but we know it's done once the correction touched the moving average. The minimum for leg 1 to call it leg 1 is to touch the high. I'll repeat again. Leg 1 condition, it has to touch the high of the broken channel. Touch, even touching, doesn't need to break it out. Just touch it. It has to touch it. Minimum. Maximum, we don't know. it could go a lot more. But we know it is done once we see a retest of the moving average. Then we determine that leg 1 is this length. This is the length of leg 1. Now we anticipate leg 2. Leg 2 is equal in length with leg 1. And the condition for leg 2, it shouldn't break leg 1. If it broke in leg 1, that means this price action is failed, is done. So leg 2 will start after touching the 21 EMA, and it doesn't need to stop here. It could do this and break this, and it could be this one. Similar length of, so this one failed to try to do the leg 2. We expect it here, doesn't happen, and it started here. When you see this move, you know this is the leg 2 of the leg 1, which is the measured move. So we have channel. You write it here. You have to memorize that. Channel, break, leg 1, leg 2, then range, then reversal. Okay? Channel, break, leg 1, leg 2, trading range, reversal. Memorize it, you can sing it. Channel, break, leg 1, leg 2, trading range, reversal. Channel, break, leg 1, leg 2, range, reversal. This is the ideal price action cycle. It's just like a cycle, the blood moving in your body in a cycle, Water coming out of the sea to the sky, making clouds, and then the rain come back down and the water come back to the sea again. It's a cycle. It doesn't have to happen exactly the same every time. You don't have the similar channel, similar leg 1 and leg 2, similar range. They are different. But you're gonna recognize them. You're gonna see them in the chart. And if you don't, that means it's either an extended price action or a failed price action. So let's focus on the ideal one. Channel, break, leg 1, leg 2, range, reversal. That's the ideal price action. And then we will go to the extended and the failed one. And same thing for the downside. Channel, break, leg 1, leg 2, trading range, reversal. Okay, so let's go to the chart and see what is that. So in here, we have a channel. And I will talk about this micro channel, minor channel, and major channel. So now this is a channel, micro channel. Leg 1 and leg 2. Leg 2, which is around this area. So they get it here. And now we have a trading range. Yet we have a trading range after the leg 2 is achieved. Okay, and now another question. Where do we start our price action? Where do we start our price action? Because the start is very important, because someone might say, okay, this is a channel, for example, and they say this is break, and this is leg 1, and this is leg 2. The start is wrong. The start is wrong. You have to start the price action cycle from a low that buyers starting their control from. We get back to our previous video when we talk about who has control and the 2121 Bollinger. So in here, we see the control are taken by buyers here. Okay? After the sellers took it there. So look to the low between this area. That is your starting of the price action. Okay? So now, look at any low. This is the low. This one. You can see this one. We have intersection here, another intersection here. -1, +1. You can start a price action from here. So you might have price action within a price action. And that, don't worry about it. It will come later on. However, focus on the major one. This one, nobody will argue that this is a low. Okay, this low comes between this and this, so I will start my price action here. Let's say we want to see the bearish price action. Bearish, the one goes down. Okay, where is the intersection? This one. Where is the previous one? Oh, this one. So where is the high between this and this? It is here. Okay, so you start your price action from here. Channel, break, then leg 1 from here to there. It touches the low, correction, and then leg 2. And then the market moves more. That means this is an extended one. Look for bigger channel. Bigger channel. We'll come to the extended one, how to draw it. However, focus on the basic one. Let's come here. We have intersection here and intersection here. Positive, negative, and positive. Where is the low between both? Here we go. So we draw a channel. That channel broken. And then they made leg 1 from here to there. And now what happened to leg 2? Uh-oh, we broke the low. That means you don't need this channel. It's done. Maybe you can use this one. This channel. Let me remove this one. Yeah. So this channel. Now it is a minor, not a micro. But as you can see, we don't quite have a channel here, because the highs are not coming together. We have lows, 2 lows at least, for the minor and the major. For the micro, we don't care about lows. Micro is just steep channel, very steep one. You're just hugging the channel to the candles. But in minor, that has higher low and higher high, you need at least 2 higher low and 2 higher high. In this one, we don't quite find that channel. So that's not a perfect channel to draw. Maybe you can do it like this. Oh, look at this. We have a low, high, high, low. And they don't need to be low, high, low, high. It can be low, high, and another high, in a condition that the low between them touched the middle of the channel. So let me show the middle of the channel. So the middle of the channel, if you have a low and a high and another low reaches the middle of the channel, that is acceptable second high. But if this was only like this and coming back again, no, this is one high. This is one high. But if the correction here touches the middle, so we can say, yeah, we have 2 highs, 2 low. Then the market did leg 1 from here to there. The high of the broken channel, this one, not this one, the high of the broken channel. We reach it, we get the minimum of the leg 1. And then the market, what it did, it touched the moving average. That means leg 1 is done. Now let's look for leg 2. Leg 2 target, it could start from here. It could start from here. You can take a trade from here expecting leg 2. But the market say something else. They took some lows there and they say, okay, we will start our leg 2 from here. The market went higher, didn't reach the high. That means there is unfinished business. They wanted to do the correction. That correction didn't break leg 2 low. If this one broken the leg 2, so that means leg 2 is failing. So far until here it is valid leg 2, and they reach it up here, and then we have again trading range. So what would you expect from here in an ideal scenario? After the trading range followed the second leg, expect a reversal. But you cannot just expect a reversal until you see sellers took control. At that time you can say, okay, where is the high? In here you can see where is the high. It is the same high. If it is the same high, you take the recent one, but I think it's not the same high. It is 265, and here the high 264, this one 264. So this is the high that will be between the two intersection. If this intersection happen, this market is live now. I don't know if there will be an intersection or not, but let's assume this one has intersection. So we will start the price action from here. So you go and you draw this channel. It can be this way, yeah. See, sometimes say, how the hell is this a channel? Yes, it is a channel, and this is the break, and this is leg 1. Okay, as long as these didn't hit the high, and they didn't. You can see here, where is the high of this one? It's here. So that was a channel going lower. That was a break, and this is leg 1. This is valid leg 1. And then the market goes there. Now should start leg 2 from here, but they didn't. Why? Because the buyer still has control. So we can say, oh, this is leg 1, but we cannot say this is leg 2. We can't. Why? Because leg 2 should not exceed leg 1, and they did exceed it. So we only have a channel with leg 1. Okay, what happens next? So you draw the channel this way. You have now a minor channel, which has a break, and then you look for leg 1. But until the sellers took control. If you're still a buyer, you should play that range until sellers took the control. Playing the range, buy the low, sell the high. So this is what would explain the price action cycle. Channel, break, leg 1, leg 2, trading range, reversal. Now let's talk about the type of cycle that we have. We might have complete cycle, extended cycle, failed cycle. Complete cycle is the one that I just explained. Channel, break, leg 1, leg 2, trading range, reversal. So this one, channel, break, leg 1, leg 2, trading range, and reversal. A reversal could be channel, break, leg 1, leg 2, and so on and so forth. So this is the ideal one, the complete one, the normal one. that you should anticipate it, that you should expect to happen. The normal thing that in a normal situation. If the market is ranging, if the market doesn't have a strong bias to one direction. Okay? And this one could be strong, could be weak. So if you have a channel, there is no relation between the channel and how long is leg one. It could be very long. And maybe you can have a long micro channel with small break and small leg one and small leg two. That could happen as well. So there is no relation between the legs and the channel. Now let's talk about the extended cycle. Extended cycle, if the market is doing a channel, break, leg one, and leg two longer than leg one, and no trading range, and the market keeps going higher, that means you are dealing with a very bullish move. So you go with the bigger price action cycle. This is your break, leg one, leg two. And this one also could be another extended one. If you trading this one, the bigger channel, you could see another big channel coming in the way because you have a strong trending day. Failed price action or failed cycle. It happens when you have channel, break, and the market just drop below the start of the channel. This is one example. Another example, you can have a channel, break, only leg one, and then the market drop, breaking this one. So this is another example of failed price action. Then the third one, channel, break, making leg one, and trying to do leg two, but it's not completed. It comes to this high and the market dropped from there. So this is the third one. Okay, why we learn the failed cycle? To know if you are still within the market rhythm or not. Maybe you are wrong in your drawing. So this will keep you safe. So you don't worry about, am I wrong or am I right? It doesn't matter. As long as you're in sync with the market, you assume this is a channel, and sometimes you might be wrong. It's not a channel, you draw it wrongly or something. If you see the market's doing that, it's a faster way to ignore this price action. Right or wrong? So it's important to know that there is a failed, and there will be a failed cycles. Okay, let's check the market now and look at the complete one. Let's look at some extended price action. For example, here, we agree that this is a low between two intersection. So here, we say we have a channel, leg one, and then leg two. But what did the market do? Well, it keep going higher. Okay, I think this is the channel. Let's see, no, that's not this one. Maybe this one. Should have similar highs. Okay, don't worry about the overshoot here. It's fine. And then the break happened here. Guess what? Maybe we can make it this way, and the break happened here. It's fine. Don't worry about those minor things. Just get the whole idea. That was the first leg. Market comes to the moving average. Now we have the second leg. Market keeps going higher. Okay, we have a bigger channel to deal with now. Major channel. Right? And still not broken. Not broken. Try to draw it in a way it is not broken until here. Here it's broken. Okay? Then we have leg 1, that's the high of the channel, they touch it here, that is the leg 1. Now we have leg 2, that's the target, and they reach it later on in the day here. And might be this is the price, the trading range that comes after leg 2, which is happen here. Then they had their trading range. Then you have what we said, this is the reversal. So try to find where are you in the price action. Okay, so let's see. There's a lot of failed price action. The important thing is that to recognize them. You need to recognize those failed price actions, similar to this one. Let's say that, oh, I have intersection here and there. I have a channel, break, leg 1, and guess what? It's done. So you don't need to use this. So that will save you from using wrong price action. Yeah, we have here as well. Let me cancel this. We have intersection here. Why not? Okay, any intersection. Channel, break, leg 1. What happened? That was a successful leg 1. But leg 2, we cannot say this is leg 2. Why? Because they broken leg 1. Even with a tick, if they touch it, even if they touch it, I don't consider it. It's a range. It will be a range. Imagine that it will be like this. So that means it's a range because it will have the same high and the same low. So you don't need to work with this. But if it broke it lower than that, that means done. We are out. So that is a failed one. Okay, maybe I can draw it this way. That channel, those highs, and this is leg 1. What happened here? Oh, they maintain it. They keep it. They didn't broke it. However, the leg 2 will be similar to leg 1, which means our target will be similar to the high in here. So don't expect too much. The market comes there and that's it. And then we have extended one. Okay, just make it bigger. Channel. Wow. Now here we talk about the leg 1 is here. Market comes back to the moving average here. We expect to go leg 2, but guess what? The market goes down. Sellers took control. If buyers get back that control, we still look for leg 2. But you cannot trade it now. Why? Because we can see now the sellers, they have control. Oh, if sellers have control, what should I do? This is the intersection. That one, the intersection. Where is the high between both? I think this one. Let me check. That high. Yeah, that was the same one that we're talking about. Now you have the channel. This one. Okay, you can draw it this way. Because the micro had the leg 1 and that's it, because they broke the high of the leg 1, not of the channel. But we have the minor one. Okay, the seller has control. You need to find where they are going to. You need to find that. If you cannot, stop trading. You don't know where they are going to. You cannot ride with a car and you don't know where is the destination. You should at least know where is the destination. So that is, you find it. Don't say, oh, should I do that? Yes, do it. Do it if that makes sense to you in the price action cycle. Do it. That makes sense. Channel. That is the break. Now this is leg 1. So now what's next? If this is the leg 1, that means we need the price to go to the moving average and we expect leg 2. Okay, what about this leg 2? Forget about it now. Don't think about going higher and the sellers has control. Yes, they could go higher and you might, guess what? You might miss the trade. Who cares? We'll find another trade. But now, focus on who has control now. Sellers has control. Therefore, keep looking down. If sellers has control, look down. Find targets down. If buyers has control, look up. Find targets up. Change your bias like this. Okay, and here they didn't touch the moving average, so this is still leg 1. Until they touch the moving average. That means leg 1 could be longer. Yes, it could be. Yes, it can be. It can be longer. It can be this way. I've seen the market going crazy like this one. Not this one. I've seen the market doing leg 1 that, I mean, just, you cannot believe it. This one. I mean, oh, not this one. I want to find one that they didn't touch the moving average for a long time. Yeah, like this one. That was a channel. That was a break. By the way, the break doesn't have to touch the moving average. Doesn't have. You just see it. Break. That was a break. And see the leg 1 how. Wow. Without touching them. So the market goes all the way down and you are not in it. You don't need to be in it. You just need to trade leg 2. You don't need to trade the channel itself. You don't need to trade leg 1 sometime, like this one. But guess what? You have an opportunity to trade leg 2 selling here. Okay, but we didn't get to leg 2. Who cares? Who cares? You short here, took profit there, that's it. You make a winning trade. Even if your analysis is wrong. And that's the professional. You are a trader in this market. You are not an analyst. Do you want to be the greatest analyst in the world? I don't. I don't care. I don't want to be right. But I want to make money. So I want to be a trader. I will trade my analysis, manage my trade, take my profit, buy, and goodbye. And then I said, okay, there is no more leg 2. Who cares? Now let's focus on the buyers here. They make channel. Now they are in leg 1. I will trade leg 2 in here. Yeah, but they didn't come there. Who cares? I enter here, take my profit there. Goodbye. Market goes down. Sometimes it goes to leg 2. Fine. But even if it doesn't, you can make money. Even if it doesn't. So now you reframe your analysis. You will say, okay, this was leg 1 and this is leg 2. So guess what? You can trade it here. So if you see leg 2, doesn't mean that you will take the trade from low to high. From the break to... No, it doesn't work this way. When you want to trade, you are here. Okay, said, oh, we have a signal here. Where are the buyers are going? They are going there. Take a trade. You know the destination. You ride with them. You don't need to go all the way there. Take your profit from the trade and say goodbye. I want to be wrong. Fine. Good luck, market. You are right, but I made money. Okay? This is channel. Break. Wow. Leg 1. Leg 2, you can take this one. This one. Exactly this one. Not this one, because sellers still struggling here. However, here they confirm it. Oh, market goes lower. Good. This is the channel. That was its leg 1. Touch the low. They reach here. They didn't touch the moving average there, they touch it here. So this is the start of leg 2. You ride from there. Enjoy the ride. Exit. Look for another one. Oh, the market keeps going lower. Oh, come on. Maybe we have this channel. But you cannot trade it, because if you want to trade the channel, you want to sell here, not here. So it's difficult to take this trade. And it's good. Market didn't go anywhere. Now, this is the price action. So we have the price action. We understand what is the complete cycle, extended cycle, failed cycle, and the price action types. We talk about the micro, the small one, channel, let me do it, red channel, small, micro, break, leg 1, leg 2, trading range, and reversal. Maybe you will have a minor one, channel, that is a break, leg 1, leg 2, and then you'll have leg 2 within that range. And then you have a major one, channel, that is the break, this is the correction, leg 2. So we have a major, micro, minor. Micro, minor, and major channels. Now let's go to the type of days or day types in day trading. Day trading, you trade the same day. You see the price action in the morning, you come after market opens, you analyze the market, you define what type of day that you are dealing with. Okay, and this is only for day trader. Don't do it if you are in the stock or something, just in future trading. Ranges, we have two types of days. Either range day or a trend day. The range day could be rectangle range, triangle range, megaphone range. And that is the worst. That one, if you see it, I advise you don't trade that day. And then the trend day, we have one direction day, only one, up, 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 or down, 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 down. Trend day could be a reversal trend. What does the reversal mean? We'll come to that. And you can have a multi-trend day. First of all, let's talk about the range days. Range days could be double top, double bottom, which is a triangle. The market going higher, lower, higher, lower, higher, lower. So that's typical rectangle range day. So just understanding the type of days will help you to expect what kind of price action cycle that you expect. Because the range day, you will find a lot of failed price action or non-complete price action. Only leg 1, there is no leg 2. Only micro, you don't find major channel. Only micro, only minor. That is the range day specification. You don't find big channel or large channel. Just work with the micros, maybe minors. And be careful, they might not be complete. Failed cycles. Okay? Maybe the day could be triangle day. The market started somewhere and keeps squeezing and squeezing and squeezing and squeezing. And then guess what? It could continue doing that. That's a triangle range. The worst one is the one that starts like this. Market start here. That was the high and that was the low. What the market before that day. Market start here, and what they do, they hit the high and they come hitting the low, which made the megaphone. From the beginning of the day you can see it. If you see it, you are dealing with the most difficult day to trade, the megaphone range. Let's see some example of range days. You know the range day, the start of the day up to the open. Let's say 9:30 in Eastern Central Time. Okay, so let me find a good range day that has at the beginning of the day double top and double bottom. That one could work. The day started here. What happened? They make a high, make a low, make a similar high, higher high, keep doing that, similar high, then they put in a low. That low, that makes type of day is a range, at least at the beginning of the day. So you deal with this day as a range. This is the high, sorry. This is the high, that's the low. You take the most or the most test of the price. So this is a range day. Yes, the market goes higher, then we can name it a reversal day. Started as a range, then it goes higher. However, it's still a range. Even if the market reached there, you can see you work ranges. You work the ranges. You work the ranges. Sell the high of the range, buy the low. Sell the high, buy the low. Sell the high, buy the low. Sell the high, buy the low. So you work with the ranges for the rest of the day. That was a rectangle range. You should find out where is the range. You can have, this one is not a range day, obviously. Let me see. That one was a range day. Market start here. You can use yesterday information as well. Why not? If are the same level. Okay, that was a range. Market goes lower. You can draw that range. Use the highs, most tested levels, the lows. Maybe you should include the major lows. For example, this one is a major one. This one is a major one. Then drawing how to draw the range requires another lesson about it. How to draw the range correct way. So just identify what types of day that you have. Here we go with the megaphone day. This is the start of the day. That was a high. That was a low. The market goes higher, took out the highs, goes lower, took out the low. This is one of the worst days that you can deal with. You have this one, and you have this one. It's a megaphone. It's very difficult. Unless the market declare one of the direction. So if the market stays there, it's very hard to trade the market. But if the market break out, then it will become easier to trade because now it becomes a reversal day. So if you see a range, trade the range until it is changed, because the type of day could change later on. Doesn't mean that I will stick to that type of the day. I just identify what type of the day that I'm dealing with and what will change that type of day if the market breaks the high, this one. So we have these types of day. Let's look at the trend days. The one direction, we saw one somewhere there. Yeah, the market started here. What did the market do after that? Higher high, lower low, lower low, lower low, lower low. So until the open, the market is keep doing lower low. That doesn't mean the market will not go higher, but it means the market is trending lower. Be careful with the buy. Don't buy until you see a clear higher high. Higher high of the recent low. For example, this is the recent low. You need to see the market traded here in order to reverse that direction. Market keeps doing lower low, so trade with that day. Trade with that direction. Reversal day, this one. The market started low, maybe started range. Maybe you can read it as a range. I read it as a range. And the market took off after that. So, reversal day. Market was a range and you enjoy the buys there. Until they come back here. If they come back here, start to think shorting. So you don't sell these. No. The reversal day, you don't take counter trends. This one, what type of day that we have? That was the start. That was the high, and what was the low at the overnight. The market took it lower, then took it higher. If the price is here, you don't trade. It's a megaphone type of day. If the market is here, within this range, within the middle of this, you don't trade. Either the market took the high and you buy it, or took the low and you buy it. Okay, let's see. This one is a reversal day, obviously. The market goes down and then took off higher. You don't reverse this day. You don't. Just think to buy it, how to buy it, how to get in long. Yes, the market will have a lot of going lower, but you don't care about them. Just wait for buyer to take control and be with them. Same thing here. The market started lower, going lower, and they flip the table. They flip the table against them. So only buy this day. Multi-direction day is whenever you see the market, it doesn't have higher, double top or double bottom. The market is doing more than one price action. Similar to today, actually. What was it today? It was a range day. But you can also see it as we have a price action going lower and we have a price action going higher. If you have a price action going lower, bear price action and bull price action, that means you are dealing with multi-direction day. Usually it ends as a big range. A big range. And by the way, today it could be read like a megaphone day. Because was the high, they took it higher and they went lower. So if the price between those area, between this high and this low, you don't trade here. You don't trade this area. Because you have some sort of a megaphone. A big one. Yeah, actually it is like this. Yeah, that's better. That was spiked lower. So that's it for type of days. Yeah, try to practice. Maybe I will talk about it live. I really appreciate staying here, and take care, be safe, be good, and I will leave you with Mo song. Thank you, Eddie, again. See you later.
He's such a cool dude, handsome, charming, and never too rude. Loved by many, but keep it cool. Don't come crying and be a fool. With that white headset, not sure where he got it, but if there's a winning trade, we're sure he'll spot it. 15 years in the game, he knows the plan. A funded trader, Muhammad's a man. Muhammad's in control, managing the trade, focusing on price, that's how legends are made. Watching the action with a smile and a glance. When it's time to strike, he won't miss his chance. Price action's the key, he moves with finesse. 15 years managing the trade, focusing on price, that's how legends are made. Watching the action with a smile and a glance, when it's time to strike, he won't miss his chance. Muhammad's in control, managing the trade, focusing on price, that's how legends are made. Watching the action with a smile and a glance, when it's time to strike, he won't miss his chance. Muhammad's in control, managing the trade, focusing on price, that's how legends are made. Watching the action with a smile and a glance, when it's time to strike, he won't miss his chance.